This happened a couple of years ago. I and one of my mates learned about a concept called decentralization and blockchain as we were on the internet. Soon after, we learned about cryptocurrencies, which is one of the popular use cases of blockchain. We didn't think much, to be honest. We didn't understand back then what we were getting ourselves into. But we went ahead to buy a few bitcoins with some of the spare money that we had with ourselves. In hindsight, this turned out to be one of the best decisions that we made. I wouldn't call this an investment as we barely understood it. In this year, I already realized most of my gains in cryptocurrencies, and as I record this, we had one of the major corrections in Bitcoin, dropping about more than 12%, which could be a great time to buy more of it. But hey, this is not investment advice. So you decide. I have invested in a couple unlisted property managed funds and currently are looking at few more interesting real estate developments in Victoria. So today I'm going to share a story about two friends and their real estate journey.
Welcome to Cashflow Formula, insights into the world of investing, and learn how to build wealth through cashflow, simplifying the complicated world of alternative investments for you. If you like what you are hearing and want to learn more, consider subscribing to the show wherever you listen to it. Here's your host, Shanil Werasinke, founder of SNW Investments.
Yeah, so actually we've known each other for over 20 years. We met each other in high school when we were kids. And basically we kind of always been...
This is Nick from Winterspring Capital. They specialize in commercial real estate, including asset management, raising capital, value-add investing, and ground-up development.
We're kind of nerdier, but also like played sports. We kind of defied all, we couldn't really put a label on us that well. But we always kind of had... The one thing that united all of our friend group was we kind of had a feeling that we wanted to be in charge of our own lives. We didn't really think that the corporate world was going to be for us long term. When we were kids, we didn't really know what the answer was other than getting a normal job. But we just had this feeling like, someday we're going to start a business together or something like that. Then we all kind of went our separate ways, went to college, and I got into the real estate industry. My parents were general contractors growing up, so I was kind of always adjacent. I viewed real estate kind of through a construction lens, which I still do sometimes, but I hadn't really, we just had this plan of saving up $100,000 pretty much. Mm-hmm. And it took us like 4 or 5 years to do that. And we're based out of Boston, Massachusetts. And during that time period that we were kind of slowly saving up money, I was working as a realtor at the time. So I was kind of getting familiar with the real estate industry. As we were kind of slowly saving up that money, the market in Boston kind of shifted a little bit, and it became really favorable to be involved with multifamily condominium development. And due to my construction background, and my brother actually is a carpenter, we felt like maybe instead of just buying a rental property as our first investment, we try a small development job. And Eric was on board, and that was in 2015. We purchased our first development job. That was in East Boston. And the prices since then have more than doubled in that area. So we've been on a really strong run. The population's been booming here. And it's kind of everything flowed from there. We built up a rental portfolio, and now we're kind of investing in a bunch of different markets for multifamily, both development and buying existing assets and kind of implementing a value add strategy, pushing the rents.
Yeah, that's how Nick got involved with real estate first. I'm sure the influence that he had from his parents drove him to real estate investing. Surrounding yourself with like-minded people is a great way to get ahead of the crowd. And if you're lucky enough to have friends who have the same passions as you are, then you are a lucky one.
Just to add some color.
Yeah, I think Nick pretty much covered it. Yeah, the basis of it. He had this idea. He had a little background, convinced me of it.
This is Eric, Nick's good old friend who transitioned from a private equity firm to partner up with Nick to form Winterspring Capital.
So once I invested with him in this first project, we kind of, went from there. We kind of parlayed into the next few, as he said, built up a rental portfolio as well. So I had to move back up here. But it was a pretty easy situation once he presented the facts to me and the data. And like he said, we just kind of had this idea for a long time. We didn't know exactly what we wanted to do, but it sort of all eventually, led to real estate. And so now, some of the markets we look at to leap off where he kind of finished, we still do our condo developments in Boston. We have 5 projects going on right now. And these are all, buildings where end users, homeowners will buy the individual units. That's kind of the market right now in Boston. It's still very hot to do it that way. But we're also looking at bigger, multifamily existing properties in the southeast of the U.S. We're looking in the Carolinas, Georgia, Florida, Alabama, Tennessee, where we can go in, buy a few hundred unit property, add some value. We have the development background, so it's not difficult for us to do that if there requires, physical value add. And we'll do this, we do this through syndications, through, investors. We pool the capital. We just think those markets right now.
Well, syndications, in other words, managed funds. If you're still not familiar about these terms, go back to my previous episode where I discuss more about these topics in detail.
Versus where we are much easier to make a return. There's more opportunity there, and there's even more interest. And kind of what Nick said about the demographics, the population growth of those areas. That's something we really focus on. We look at data and we say, okay, look, population's growing there. Typical rents are growing there. You can see cap rates compressing, of course, which, it's very competitive then in that area. But we're still finding deals that we can make work.
Development's always going to have the highest returns.
Mm-hmm.
And the projects that we've kind of had a specialty with are where you get land entitled. So we'll take, say, a single family house or a small commercial, say a single story commercial retail property. And we're very familiar with zoning regulations. So those basically just kind of govern what you can build where in different cities and municipalities. We're very familiar with studying zoning codes. I know the zoning code in Boston like the back of my hand at this point. Mm-hmm. And we can kind of see individual parcels where maybe even the owner doesn't realize how valuable it is. Nowadays, due to the hot market, everyone kind of thinks their parcel is valuable, even if it isn't. But back in the day when we first got started, that's kind of one of the ways that we'd find these really profitable development deals, because you'd be able to get it for a competitive acquisition price, be able to get for pretty low because it's not on the open market. There's not people bidding on it, especially when you find these things off market. Sometimes we'll see things on the open market and other people just didn't see the opportunity because they weren't as familiar with the zoning code. Actually, that was our first project we did in East Boston, was like that. It was an existing 2-family, and I realized you could add a third unit. Just little things like that can add hundreds of thousands of dollars to your return on a project. So those are you're always going to get the highest returns with.
This is a very powerful concept. Nick, as a real estate developer, is very competent in the area. He is capable of seeing little things that could potentially have a great impact on the overall project fairly easily with his experience. This is why I'm a big proponent of managed funds, as they allow you to leverage the expertise of market and industry experts while making a reasonable returns. Here's how they approach a project.
Entitled development, where you bring it from start to finish. You have the whole vision. What we do in Boston is we go through a zoning relief process. Basically, they have a zoning code here that hasn't been revised in decades, and it's very stringent, and most lots would not be able to, you wouldn't really be able to build anything by the letter of the law. And we'll go in there and we'll use a zoning attorney, and we'll work with our architect, and we'll do a bunch of political meetings, meet with civic groups, meet with neighbors. And basically we come up with a design based on this community process, which is a tough process. A lot of neighbors don't like development, and you got to kind of find a middle ground with people who, don't really like you. But once you're able to overcome that barrier, you'll make a lot more money than if you just bought, a parcel that already had permits in hand, or you're just doing a by right project where you don't need any special permission. The reason for that is you can increase the density. You can do double the size of building that you would have done versus the zoning code. So we'll go into like a zone that says you can build a 2-family property here, and we'll build 7, 8, 9, 10 units. And these are luxury units. Boston is, it's a very strong life sciences industry city. It's one of the strongest in the country. I think it's only rivaled by San Francisco, really. And it's getting stronger. I mean, if you drive in any direction, 10, 15 minutes, you'll see a lab going up in Boston right now. And that's kind of built on the backbone of the university system. We have Harvard and MIT, which are world-class universities. And then we have a whole bunch of other really high-level universities as well that you might not have heard about. That kind of research backbone has just kind of led to an explosion, really. And it's driven the prices for these luxury condominiums through the roof. A lot of markets, they've more than doubled. We have an upcoming project in Brighton, which is right kind of in the heart of that university research area. It's 5 minutes from Harvard and MIT. It's a $25 million development. And that kind of area, you can get over $1,000 a square foot selling condominiums. So these are really high level luxury condominiums. So even you do a small project, you can make like over $1 million for a 5, 6, 7 unit project. If you buy it at the right price.
Along with Winterspring Capital, both Nick and Eric owns another development firm. Here's Eric again explaining to us what they are doing with that firm.
Well, I would say PWN Development, that's the development company. We both sort of share similar roles in that. Nick kind of does the underwriting of the development projects, whereas over in Winterspring Capital, I underwrite the multifamily deals. But as far as PWN, there's a lot of construction management involved. Nick has a construction background. He sort of taught me a lot over the years. So we're both kind of dealing with contractors, interfacing with zoning attorneys. We have consultants as well. Sometimes you need sort of a zoning consultant who knows people at the city, who has political relationships. So we're both pretty heavily involved. That's kind of how we run our development company, because when we're meeting with the neighbors, as Nick mentioned, or local civic groups around some of these development sites, they prefer, sort of more down to earth people that they can talk to. It's not just some invisible guy in a suit who sends the attorney. So we both kind of like to be there. And then as far as Winterspring Capital, we have sort of more of a division of roles, whereas, Nick can talk about his specific role more so, and I can, but I kind of, I'm managing a lot of how the company's run and taking care of, keeping the company sort of up to date on tasks, and sort of more like a CEO type role. And Nick's sort of the, creative lead of the company, sort of like the chief creative officer, creating a bunch of content, writing books, dealing with social media, really trying to, sort of propel the company, make us known, coming up with a lot of the ideas. So we decided with Winterspring Capital, we'd have a bit more division of labor to really boost the company to another level.
I am a big believer of educating investors as we invest along. End of the day, as an investor, you need to know enough to make a sound decision for yourself. In that case, having educational materials from the industry experts can be a great asset. Not only that, having many educational materials is more likely to boost the credibility of the investor, as it clearly demonstrates their capacity. Here's Nick again with how they've been leveraging the content creation.
Yeah, we met a developer a couple of years ago, and we noticed that this guy, he kind of started at the same level as us, but he really had kind of his brand front and center. Whereas at the time, we didn't really we didn't really care about our brand. We just kind of thought we'd buy projects and we could make really good returns. We saw this guy kind of grow a lot faster than us because he put his brand first. And that's the most important thing. And, we're not perfect guys, but we always learn from our mistakes, I'd say. So now I'm specifically focusing on the brand, not from the perspective of, hey, come buy my condo. It's just more, hey, we exist, we build high quality luxury real estate. We invest in multifamily real estate. And also there's an element of giving back there. Like there's people who could get use out of the books I've written or the articles I've written or the YouTube videos we've recorded. And they might have nothing to do with my company, but I got people when I was first starting out, when I was Googling, real estate investing, there are people who had given me the steps onto the journey that I'm on now. So I view it kind of as a giving back thing where you're also building the brand. We're not necessarily expecting a direct return from it, but just making people aware of the company and what we're doing. Because if you don't make people aware of who you are, you could be the most talented investor, the most talented developer. There's not going to be people saying, oh, that's Winterspring, well, let's send them a deal. You're not going to get that sort of outreach that you have to do it intentionally. There has to be some intentionality involved with it, which is just a lesson we've learned from experience.
Brand really does matter. And on top of that, what really matters is a great track record with an impressive returns for its stakeholders. Here's how Eric and Nick is striving to get there.
We're trying to scale up. We're trying to do bigger and bigger projects. So our upcoming project, we have $40 million in the development pipeline, whereas a couple of years ago would have been less than 10 million. So it's like, we're always trying to reach a higher pinnacle. So we're always kind of pushing the envelope on how big of a project we can get financed. Having that brand existing out there when you speak to a bank or a mortgage officer or any type of lender, really, even if it's a hard money or a private lender, they really just take you more seriously because you're treating the company like a real business. That's what real businesses do. They don't just go and swing a hammer and say, oh, I made a lot of money. They have a brand. And people recognize that. That's how we as human beings kind of relate to, businesses. You say, oh, that's a brand recognition. So we've had success. I've had lenders reach out to me and they're good lenders that we work with. I've had people reach out to me and send us deals. We have brokers that are sending us deals and taking us much more seriously than they would have 3-4 years ago when we had no brand. Maybe we were doing well. Every project's profitable, right? But who knows who you are? That's why it's so important.
I mean, we'll even get calls from, like Nick said, from brokers or anyone in the industry, even general contractors who want to bid on our jobs. Even a simple thing as having signage and different sort of banners around your job sites with website links and numbers. We get a lot of outreach just from that. Like I said, contractors, subcontractors, people that want work. To the point where, now in Boston, there's probably a decent amount in the industry who know who we are, who know who our companies are.
Yeah, because Winterspring is more the main company. PWN specifically involved with when we do development jobs. But it would be, for example, our investor database is with Winterspring. So all people who have invested with us on previous jobs, that flows through Winterspring. So it might be a PWN development job, but Winterspring will be investing in it. Mm-hmm. We do it that way so we can keep PWN development as a development company, because we're doing some projects in PWN development that wouldn't really involve investors. We're doing an affordable housing project that's funded through city subsidized funds. So we kind of like to have some separation. So there'll be projects where Winterspring's investing into the PWN jobs, but then there'll also be projects with Winterspring where we're just purchasing an existing value add multifamily deal. Obviously, there's no development component there. And it also just kind of happened organically. We created the PWN company first. And over time, it just made more sense to have this separate brand that's kind of more of an umbrella that covers development, it covers investing, We don't want to be restricted just to residential as well. We haven't done a deal yet, but we're very interested in expanding into self-storage development. So there's just a lot of different ideas, and we want to keep the brands separate, but they're kind of interconnected. They invest with each other.
Let's find out how Winterspring Capital makes an investment decision.
Yeah, so I mean, for us, data is everything. So one way that data really informs the way we invest is demographic data. Big thing is population growth. I've been obsessed with population growth, before I even really knew what I was talking about. It just intuitively to me, if the population's not growing, it doesn't really make sense why you'd be investing there. So we look at, there's a really good resource for US real estate anyways. It's called city-data.com. And basically you can see population changes year by year, 20-year changes like versus the year 2000 census. You can look at crime statistics, but we like to aim for at least 1 to 2% population growth over a 5-year span. We're not strict on that, but that's kind of our minimum. If I don't see population growth, we're not going to invest there. And obviously, we're not going to invest in places with declining population. We'll also look at like unemployment statistics. Like for instance, on citydata.com, you can look neighborhood by neighborhood. So you can see sometimes through data, oh, this neighborhood for some reason is a higher unemployment rate than the rest of the city. You can kind of uncover trends like that you wouldn't have previously been aware of. And then you can see, well, you might still want to invest in an area with higher unemployment if the numbers work, but you'll be ready if there's an economic downturn, you're going to have a lot of delinquencies. So these are sort of things that'll inform the way you invest. I wouldn't say we have hard and fast rules on anything because we like to think with a flexible mindset, but everything's informed by data. When you look at it on the development side, it's actually much simpler for us. We really look at everything from two perspectives: the cost on a per square foot basis to construct in that market, how much it costs for construction, and then the price on a per square foot basis that you can sell condominium units. The reason why we look at it from that way is because you can really just look at the spread. The cost of construction is fixed in that market. So here in Boston, it can be anywhere from around $200 to $250 a square foot, depending on what type of building you're building. Then, from there, from your own experience and just going through different deals, you have an idea of how much, people are selling land for and properties for in that market. How much properties are going for, how much it costs to build. Then you just simply able to say, well, I need at least $600 a square foot on the sellout side before this thing makes sense, because it's already cost me $200 a square foot on the construction side. So looking at everything through a price per square foot lens is very helpful. And I'll go on MLS, which is where these sort of residential home buyer listings will be made. When we sell luxury condos, sometimes they'll be listed on MLS, and that's a good source of data for comparables. So I'll go on there and I'll use what's called a map search, and I'll be able to put in, say, minimum $600 a square foot for condo sales within the last 6 months, and I'll draw a circle around a neighborhood that I'm considering. And you can pick up on interesting trends that you just wouldn't really be able to see otherwise unless you're looking at this from this data lens. Like we noticed in a neighborhood of Boston, a neighborhood called Dorchester. If you go past, it's not right past the highway, but if you go a certain length past a highway that cuts through that neighborhood, you can't sell luxury condos. And you can see that visually plotted on a map through a data approach. So these are just like a couple examples, but I'd say pretty much everything we do, if there's no data, we're not going to be involved with it. We need some sort of...
When considering an investment, there are 5 main things that you need to be aware of as an investor. Number 1 is how much population growth is enough to consider the investment in the particular area. You should at least see between 10 to 20% population growth based on the current population over the last 2 decades. And at number 2 is the median house income growth. Once you have the areas that fit the first criteria, then you need to check to see if there is at least 20 to 30 growth in median household income growth in the same period. Once you filter areas based on those criteria, then look at the data to see if there is growth in median house value. This value should be at least 30 to 40% for the same period of time. Once you filter the areas as per the above criterion, as the fourth step, you should check crime levels in the area and make sure it is at least close to the national average or below, and decreasing at the same time. Once you filter the list of your areas, lastly look for last 12 months job growth. This will allow you to understand how the area is likely to perform in the near future based on major employers. With that note, here's how Nick and Eric would start over if they had to do so.
I think if we were starting over from square one again, we would start working with investors a lot earlier.
Yeah, we that was one thing, as Nick sort of told that story at the beginning, where it took us years to save up to make that first purchase, and then we still parlayed the profit from that first project into the next one, and a few more after that. It took us a while to realize the power of investors, and I mean, we sort of looked at our peers, the gentleman we mentioned earlier with the brand, and other guys doing similar size developments to us, and we saw. We met with some of these guys and we thought, you know what, I think we kind of know more about this than them. We're actually maybe could be further along. And we realized it's because they brought in outside capital. And that really could have propelled us if right from the start we did that. And of course, that might have been tough to get people on board when you don't really have a track record. But I think we've discussed this actually a few times. That probably is the biggest distinction in terms of difference we would have done.
We were doing expensive development projects all with our own capital,
right,
which is actually pretty rare, really. And as Eric said, for our first job, no, I wouldn't think investors would have signed up with us, but we probably should have started doing it on our second and third job rather than like our 8th job like we did.
Yeah, it just took us a little longer to really, flourish, I guess you could say, compared to what it could have.
Well, that's a wrap for this episode. And here's how you can get in touch with them.
Yeah, absolutely. Thanks for having us. And if anyone's interested in our strategy that we use, please check out a book that I wrote that goes through the whole multifamily condominium strategy. You can access it at Winterspring Capital, all one word, winterspringcapital.com/development-book. It's called Millions Through Multifamily Development. And it goes through the whole strategy step by step. So anyone who's interested in getting into multifamily development, they like luxury real estate, condominiums, that's a good place to start.
Thanks for listening to the show. Remember to join us again next week for another episode. Learn more about what we discussed here by visiting our website, cashflowformula.com.au. Until next time.